IVM.
I'm so glad I've moved all my credit card payments to the CRED app because CRED has taken the trouble of making payments out of my hands. With CRED Max, I can pay my recurring expenses like rent, education fees, etc. from my credit card. I even manage multiple spends in one place and get recommendations as to which of my credit cards I should use so I can get maximum benefit. It's all very simple, just download the CRED app. Folks, welcome to Paisa Vaisa, brought to you by CRED, the most rewarding credit card bill payments app. I'm your host, Anupam Gupta, P2p on Twitter, and we've got a wealth management platform on our show after a long time. My guest, Saumya Shah, founder of Tarrakki. We're going to talk about mutual funds, wealth management, importance of advisors, and much more right after this short CRED convenience break.
$100. That's all it takes to begin your journey with Bitcoin and Ethereum. No, really. With CoinSwitch, you can start investing in over 100 cryptocurrencies with just 100 rupees. On top of that, there are zero charges for deposits and withdrawals, so you can trade, buy, sell, however and whenever you want. All of this, plus their extremely intuitive interface, makes CoinSwitch the perfect app for beginners in the crypto space. But don't take my word for it. Just download CoinSwitch for free and try it out for yourself. If you'd like more information on cryptocurrencies, tune into a show about crypto with me, Rohan Joshi, my new adventure on IVM podcasts. CoinSwitch, kuch to badlega.
And welcome back. Saumya, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Anytime, Anupam. It's an honor and it's a pleasure to be here. Been following you on Twitter and the great posts which you've been making, and of course the podcast also. So really excited and thrilled to be here today.
Thank you. Thank you so much for your kind words. So for our listeners who don't know Tarrakki, a very quick intro, what it does, and we'll go into detail later in the show.
Sure. Quickly summarize Tarrakki. The idea behind Tarrakki is to build a full stack comprehensive wealth management platform for masses in India. We have various asset classes like mutual funds, equity advisory, alternative investments on our platform. And yes, we not only give a platform to invest, but we advise our users as well on where to invest and how to invest.
Yeah, that's the first thing that struck me when I go to your website. I see that you're a BSc member. I see that you're an AMFI mutual fund distributor and you're a SEBI RA. Regulatorily, or, how do you just segregate all these services under one platform?
So yes, we are a member at BSc because any transaction which happens on the Tarrakki platform gets routed through Indian Clearing Corporation, which is a subsidiary of Bombay Stock Exchange. So at no point in time, the money touches our bank account. We always make sure that there is an intermediary in between anytime you're buying a mutual fund on the platform. So that's how we are associated with BSc. We have an AMFI membership as well. This AMFI membership is mostly geared towards corporates whom we provide a treasury service. And for all retail individuals like you, me, we follow an RIA-based model where there is a fee-based advisory module. So we only have direct plans on our platform for our users, and we charge a subscription fee for the advisory which we render.
It's very interesting, because you've got this entire suite of products. And my next question to you is, your website also mentions a list of major issues in existing investment apps, right? And all our listeners know, because a lot of these investment apps have in fact been on our show as well. So the existing landscape which is available to me to invest, whether it is in stocks, whether it is in mutual funds, whether even financial planning, a lot of people now offer that also. What are the gaps out here? What are the issues out here? It'll help our listeners also understand, and it will also help them separate Tarrakki and what you have from what others have.
Sure. So, Anupam, the major challenge, when I moved back from the US in 2018, and when I started doing some surveys and started talking to people, the major challenge, and I would say it wasn't a pleasant experience when I found out that majority of the users who are transacting digitally, they have been buying funds which have been performing really, really well in the last 2 or 3 years. None of those funds or the investments which they made were ever aligned to their financial goals or their risk appetite. Let's take an example. There is XYZ. I'll take XYZ Technology Fund, for example, right now, since all technology funds have done extremely well in the last 1 or 2 years. So anytime we see these funds listed on several platforms, it would be like last 1 year return 20%, last 3 years return 40%, etc., etc. So it becomes a very good product hack, I would say, for someone to make them transact. But it's not suitable. And this is something which we realized, like there was a user whom I was talking to, and the goal was that they wanted to go to, I think, Thailand or somewhere in Southeast Asia in the next 6 months. And to save for that, they were saying 25,000 rupees in a thematic fund for 6 months. So there is that major misalignment which happens just because you get excited when you see, okay, yes, ये सबसे अच्छा fund है क्योंकि इसने ज़्यादा return दिया है. But you and I, like, we know that's not the case. Like something which is giving a return today is not going to give a return in the next, let's say, next 3 years or 4 years. So there was this major gap, and like all of us were struck, like, why is this happening? Then we studied, and majority of the platforms were pitching products based on historical returns. When you look at Tarrakki, or when you sign up Tarrakki, there at no point of time a fund would be recommended to you based on its historical return. Even if you try like a goal-based investing feature or any of the investment strategies, it is completely linked to the risk profile and the investment horizon. So that is one major gap which we found in terms of a lot of platforms which were promoting historical returns. And while at the same time, it's not only historical returns, but even the same applies for equities. I was reading a newsletter recently by one of the stockbroking fintechs, and one of the most bought stocks on the platform last month was Vodafone Idea.
Okay.
So how can it be one of the most bought stocks? Like, and that's where we realize that it's more of like the thrill which at times people seek, which is different. So if you're seeking thrill and you make risky bets, that's a different story. But if you're doing a proper investment planning or a portfolio management, then I don't think historical returns, or you're not doing it for the thrill, right? So that's something which we don't, we encourage our users, don't fall into this returns frenzy. We are in a bull market, so everything looks golden right now, but that's not a perpetual thing.
Interesting. Financial advisors, right? Why are they important? Now, I've tried to cover this topic with few guests on my show, and we've gone into detail. I want your perspective on that. A, two questions. Okay, one. A, why are financial advisors important? And B, there's so much information out there that's completely and totally free to me. This podcast is one to the listeners, and there's YouTube, and there's God knows how many people out there. So you've got publicly available, absolutely free knowledge about money and finance, and then you've got financial advisors. Give me your perspective.
I'll give this perspective with a case study which we had done recently. As you know, that one of the major asset management companies shut down probably 6 and 7 debt funds, and there is a lot of investor money and liquidity which is stuck right now. It's either stuck, it'll come back, but then of course you're losing the returns which you could make, or there's always that opportunity cost. Now, as you rightly said, there's so much information. For an end user to digest that information becomes more difficult because you are overfed with information. Now, when you look at this, let's take an example. And this is where I'll link the information aspect and the financial advisory aspect. There's so much information that it becomes difficult to digest. Now, the role of the financial advisor here is to come in, dissect for you, and provide you an ultimate solution. Your full-time job is not to study all 3,500 mutual funds in the industry, right? Maybe you're in IT, you're in finance, or you could be in manufacturing. That's your core business, for example. So it's not your job to study them. It's our job as financial advisors to study them. So back in November, before the funds shut down, that is when we had placed the sell call on the entire debt, all the debt funds which the AMC had. So when you look at Tarrakki's investors, our assets under management with that AMC on the debt side were just 35,000 rupees when the funds shut down. And like, we cannot force every investor to redeem, but we did take a conscious call of making even phone calls to investors that we put a sell call. And at that time, the Supreme Court verdict on Vodafone Idea had come, where they had to pay the AGR dues. So, and when the fund was holding 7 to 8% of Vodafone Idea, there was a massive risk of a capital wipeout. Your capital is not getting protected in the debt fund. So as financial advisors, it was our responsibility to make sure that this does not happen, even though these were direct plans and many people did not subscribe to our premium version where we give like handheld financial advice. But we still made that conscious effort of sending email blasts or making phone calls. And this is where the role of the financial advisor comes in, because when we did a case study, so we had recommended 2 other debt funds instead of the funds which were managed by that particular asset management company. If you would have switched, your 100 rupees would have been close to 124 rupees today, versus right now that 100 rupees is somewhere around 97, 96 rupees, where you've lost 3-4 rupees, and plus that opportunity cost of whether if you had the money, you would have, let's say, bought a Nifty index or a Sensex index. So it's not only about the quantity of information, it's also about the quality, like how to dissect it, what to understand from it, and then what you communicate to your user and what's an alternative to ye nahi to fir ye karo, aisa nahi karna hai to fir ye. So helping them choose right path and the right approach is more critical, and that's where a financial advisor comes in. Otherwise, it's too much information that people end up buying a technology fund. Like we also see a lot of investments which are happening in technology funds right now, which is hardcore thematic, and people don't know it's a very high risk, high return product because it's sector or theme specific. But that is where we come in. Like if it's a new investor, we only tell them one thing: boss, you don't need anything else. Start with a Nifty index fund if you want to invest for 5 to 7 years. That should be the first fund in your portfolio. Versus someone who's trying to do it by themselves without an advisor will end up going for a thematic fund based on the historical returns. So yeah, this is where I feel the role of a financial advisor helps you understand all that information and gives you that optimal solution for it.
Right. Saumya, I'm going to, so you run this product, I run this podcast. I'm sure you would understand that there are two questions. I get asked these two questions a lot. I'm not sure if you do. Okay. The first is an easy one. I'm not going to ask it to you, and I'm not going to answer it out here also because it's something that this podcast is not about, which is basically kya lagta hai. Okay. Kya lagta hai then goes into kya kharidna chahiye, blah, blah. Okay. Which is great questions, but honestly, this podcast is not about that. The second and the more important question, Saumya, which I'm giving to you, okay, is a 25-year-old coming to you and saying, Saumya, where do I start? Not invest my money, but where do I start to learn about personal finance and money? What would you tell this guy or girl?
So there are a lot of financial literacy applications and websites which have come up, and these are very basic and fundamental. Like we ourselves have also built a learn module on the Tarrakki application. This learn module is something as basic as what is a rupee cost averaging or what is compounding. It's hardcore basics, I would say, of investing or learning finance. So our idea is like if a doctor and an engineer can understand this, people who haven't studied finance at all, that's the end goal of building this. So not only Tarrakki, but there are a lot of platforms which are hardcore focusing on financial literacy and education. So for a 25-year-old, I think the first step is to start with the basics. Like every week we send out an email blast and we publish it on the learn section, which is like a weekly summary of what's happened and how the news have been affecting the markets. So start reading. Start reading articles. B is something where you start reading and subscribe to a financial literacy channel if you can. There are plenty of them who are giving very good financial literacy. Like your podcast is one. If you're a 25-year-old older, like start with your podcast. Like why not your podcast? I was listening to some of the podcasts. There's so many things which I learned in spite of being in the house. Like, hello, I didn't know that the bank was doing this. Oh, I didn't know that PSU banks had such a penetration level. Like all these were learnings from your podcast, which I had. And there are so many podcasts. Spotify, like I've subscribed to 4 or 5 of them. Like FinShots Daily is one. You get the news, but this news also has a connect in terms of how it's affecting financial services. So start subscribing to podcasts and these financial literacy channels, and I think that's the best and the right approach to do it. One thing which I definitely want to highlight and something which I'm very bullish on, since you mentioned 25-year-old, I'm even going to take a step back and go to a 15-year-old.
Go for it.
India, there are a lot of neobanks who are focusing on teenagers at this point who've come up. My bet is in the next 12 years, these neobanks are going to build such a robust module of financial literacy that this entire question which we have, financial literacy, if 25, 30-year-olds don't know, in 10 years, this will be solved by these fintech neobanks. Because I was speaking to a few founders and the founding teams, and the thoughts and the ideas which they had of building financial literacy, I was just really awestruck by it. And that is where and this is something which I can pen it down. In 10 years, a 25-year-old won't have this question because these fintech neobanks would have solved this for sure.
Awesome, man. I just love the passion that you've got, and thank you so much for your kind words of Paisa Vaisa. Shout out to the guys at FinShots if they're listening to this. They were also on Paisa Vaisa a long time ago and they started the podcast. I'm just thrilled. I think they're the largest heard podcast right now, or if not, then at least in the top 3, and I wish them all the very best. They're doing a really good job. So thanks for that. Folks, if you're listening in there, I'll just recap Saumya's recommendations for you. Okay, he said a few podcasts. Okay, Paisa Vaisa, thank you. FinShots. And he's mentioned a few YouTube channels. I'm sure that you can figure that out on your own. It's like I'm almost 50. My sources of learning, other than the work that I did, of course, because I was in the stock markets, used to be books. The world has changed. You've got YouTube, you've got podcasts. So just go figure whatever is good for you, but also figure a small break, because on the other side, we are going to talk about the specific services, the specific products that Tarrakki has to offer, and they're quite interesting. So don't go anywhere, folks. We'll be right back after this great convenience break.
Don't you think that if everyone around you is getting smart, you better be smarter? Hey there, I'm the traveling professor Siddharth Deshmukh, and I'm back with season 2 of my podcast to make you smarter. Smarter with Sid. What's this season's focus about? Well, it's about 10-minute nuggets that will make you stand out at work. It's time to go from smart to smarter. Tune in every Tuesday and Thursday and become smarter with Sid.
And welcome back to this episode of Paisa Vaisa. Saumya, let's start now. Okay, now we'll spend some time on understanding Tarrakki and the various products it has to offer. The first thing that hits you when you go to the website, like when I went to the website, I saw this liquid fund debit card. Okay, people have tried it in the past. I think Reliance Nippon used to have something similar like that. Tell us how this works, right? Because my issues with a debit card, which is a separate product, and a liquid fund, which is a separate product, mixing and merging both of them, of course, it does have some very useful functions, but then there are issues, like what if liquid funds dip in value? I know that doesn't happen, right? But it did happen last year in March in that freak incident, and it's happened during crisis. And some liquid funds give lower returns than bank accounts. I mean, there are some bank accounts that are giving 5, 6, 7% savings bank account interest rate. So just explain this product and these one or two small points.
Sure, absolutely. So just to quickly summarize, like this product is something which we have been working with Nippon on it. Since you mentioned Reliance Nippon has tried it, we have been working with Nippon only on this product. And the product is fairly simple and straightforward. Whatever surplus monies you have made, be saving it for a rainy day or an emergency fund. So the intent here is don't block it in a fixed deposit, park it in a liquid fund. In case of any emergencies, you'll be able to redeem it from any Visa-enabled ATM in India or at any Visa point of sale. You can swipe the card. The core reason and the function about this is, yes, there are only a very few banks, and again, not 5-6%, also 5-6%, like probably an exclusive privilege, Kotak privilege, or someone can give 4.5 max in its bank savings. But for that, you need to maintain a minimum balance of 25 lakhs. So when you look at retail investors in India whose bank balances are 10,000, 15,000, 20,000 rupees, for them, it's just 2.5 or 3% at the maximum. The idea is more of on the don't leave this money idle. Put it in a liquid fund. And when you even look at a liquid fund, yes, last 1 year, we've seen liquid fund returns which have gone down to 3.25-ish. Earlier, when we had launched the product, it was at 7%. So I know that right now there is that competition between a bank savings account and I would say a liquid fund. But when you look at any premier bank in India, the largest banks in India, all of them are giving 2.5% on a savings account for retail individuals. So it's still 75 basis points more. On top of that, the biggest advantage behind this product is financial literacy, which you had asked earlier. Someone who's never ever invested in a mutual fund, if I directly go and tell them, and if they're directly investing in an equity fund, and if the markets dip, they will freak out. And India as a country which has 140 lakh crore of fixed deposits. Now, even if we are moving 10% of this amount in a liquid fund and educating even 10 million users to start off with a mutual fund as an asset class, I think it's a commendable job. Like that's the short-term goal, I would say. So we are educating users of how to get into mutual funds, but the first product should not be an equity fund. Let them try it out. And we see this. Like, I'll give you a crazy example. We had a user, it was a Tamil Nadu zip code. I forgot the name of the city. The town, I would say, it had a population of 10,000 people. We had shipped the card over there and we are tracking that because we are very curious, like, what is the spend going to be? What are they going to do? So out of the 5,000 rupee investment, that person next day, we saw debit card swipe, which happened at a nearby temple, 850 odd rupees. Now, we had done that user's KYC, onboarded him in mutual funds. He tried mutual funds first time got an experience of it. He swiped it at temple. I don't know what the end goal was, but we saw like a temple trust was the description in the transaction. Now, this user today, then later, like our product team gave him a call, tried to understand what he feels about mutual funds. Now he's comfortable and he has an equity SIP. He's understood the product. So there's that entire financial literacy gap was bridged because we put something forward which they were using earlier, which was a bank debit card. Now it's a mutual fund linked debit card. And this is where the interlink happens. So like for someone like you, yes, this product might not make absolute sense, but for someone who's an absolute newbie, we build a sense of trust and credibility through this product where they understand, okay, their money is safe. And then that entire journey begins where we bring them from an FD market to the capital markets.
Okay, let's move to the mutual fund advisory work. Okay, the work that you do, because how does it, today you've got a lot of experts who are saying that forget active mutual funds are dead. There is enough data to show that passives are easily smoking out all the active mutual funds. So that's what a lot of experts say. So instead of hunting down what is the best mutual fund scheme, best performing, best this, best that, just go and put it into an index, that's it, or an index fund or an ETF, depending on what you want, what you like. So how does your mutual fund advisory work given this kind of perspective? And do you recommend direct or regular mutual fund to your users?
So our mutual fund advisory is very focused on it. So when you look at the product, it's a very low cost product where users are paying a 350, 400 rupee subscription fee per month. So when you have a 5-7 lakh rupee portfolio, instead of doing a regular plan and taking advisory, going direct makes an absolute sense for you. The biggest differentiator here becomes the asset allocation aspect. Yes. So when you look at our advisory, our most recommended fund is an index fund. Like we never recommend a large cap, we recommend an index. But like, let's say when it comes to a mid or a small cap, we still feel that actively managed funds will have that alpha and edge given of the overall size of the market. So A comes the asset allocation part, where for you, for someone like you who's 50 years old, your asset allocation will be completely, I would say, opposite of mine at 30. Mine is very equity heavy focus. Yours might be a little debt focus. So asset allocation plays a very crucial role. And the example which I gave earlier of aligning your financial goals to the right products. Yes, you can invest in a product which is a passive product, but is that passive product the right passive product for you or not will always be the question, and how much to allocate. And this is the main reason why we are able to sell a product or price our subscription at fairly significantly low prices. That's just predominantly because, yes, we are very pro passive products. We love passive products at Tarrakki. But at the same time, we also feel asset allocation is important, and there will be some products where advisory is essential, like in a mid or a small cap fund, or even in debt funds at times. And I'll give you an example as well. If you look last year, the most trending funds were, I would say, GSEC funds, because of the interest rate cuts which happened. So their returns had exponentially shot up. Now, someone who's investing today, if they want to invest for 6 months, they'll look at an ultra short-term fund and see, it's only 4 or 5%. These funds are at 8-9%. I'll just go for this. Now, when you have a financial advisor, this advisor will tell you, no, go for an ultra short. Your horizon is only 6 months. So this is that differentiation of advisory where you're not paying 1.5%, 2% for advice. You're barely paying a very small portion and making sure that even in the passive space, you're getting the right advice.
That's really interesting. This entire thing about matching your in debt funds, that is equity, though, is a different thing altogether, but matching your duration with your goal. It's a very interesting point. A lot of people miss it. The fact that you chase a credit risk fund or a GSEC fund just because it's given great returns. Whereas if you want money for 6 months, you'd obviously, that might not be the right fund for you. Chalo, let's move to equity advisory. Okay, hot field. Everybody's advising stocks. You've got small case also, which is out there, which is offering a lot of products. A lot of advisors just develop a small case and boom, they're done. Tell us about your equity advisory. How does it work? What are the charges?
Sure. So our equity advisory product is again very similar to mutual funds. We've significantly underpriced it, like at 550 rupees a month. And it's a model portfolio. So what we realized, like if 14 million new demat accounts have opened in last year, majority of this was driven by retail investors. Retail investors, when they're opening demat accounts, there's that, for lack of a better word, a khujli kind of a thing where people want to invest, right? And that is why, like the previous example which I said, Vodafone Idea being the top bought stock in the entire month at one of the broking houses was very surprising. So there's that always gap where people are like, kuch tips de do, you'll ask colleagues, you'll ask friends, kya lena chahiye, kya bechna chahiye. Everyone will tell you what to buy based on the tips which you get, but no one tells you when to sell and how much to buy. So there is that very big gap where, yes, you might get good advice of what to buy even, but no one's going to tell you when to sell and how much of that portfolio it should be. So what we've done is hardcore, again, a very low cost subscription product focused on retail individuals, pure play. And the idea behind this advisory is don't buy random stocks. You don't need to buy any random company. Subscribe for the model portfolio, and we've listed it on small case. Tarrakki it goes by the name of Alpha Quest by Tarrakki. It's on small case because when you look at small case, it's a brilliantly designed execution platform. No matter whom your broker is, you can subscribe to my small case. Within 2 clicks, you can execute it. So yes, we listed it on small case so that the execution angle becomes easier because we are not brokers. You're not into the broking business. So you can continue to use your own broker. You can subscribe for the model portfolio and you can get well-researched stocks, a proper composition of an equity portfolio ranging from minimum, like we don't have a minimum, but maximum is 25. We don't cross 25 stocks at any point of time. Even a fully deployed portfolio won't cross 25 stocks. So you get very well hand curated, crafted, proper 25 stocks to invest in. Mix of large, mid and small caps. And you get the most crucial element here is it's unbiased investment advisory. I am not going to make money when you are doing a broking or you're buying or selling with your broker. I'm only going to make money when you're going to renew your subscription. So my core interest is to making sure that I can provide the best advice And yeah, that's the entire thesis of our model portfolio and equity advisory. Low cost subscription so that more and more people can avail these services.
Sure. Before I go to the newer, P2P lending, DigiGold, Elivo, okay, I just want to check whether we've covered the basic, your basic products. We've covered the ATM card, we've covered the mutual fund advisory, we've covered the equity advisory. Just wondering, since you've also got a SEBI RIA license, do you offer financial advisory, or where does that fit in?
Yes, we do offer financial advisory. In terms of again, it's a limited scope. So if you come in, like, it cannot be on each and every asset class on which we can advise on.
Okay.
So yes, for equities, mutual funds, financial planning, goal-based planning. Yes,
you have that product, right?
Yes, we have that product. So if someone comes to us who's a 25-year-old who wants to build a portfolio for the next 15, 20 years, yes, our investment advisor, based on their financial goals, will help them select the right funds, and create an optimal approach by picking the right asset allocation and the right products which they fit in their goals.
Sure. Now let's get into all this, because you've got a really big suite of products here. Go for it. P2P lending, DigiCode. Let's talk about both of them. Let's go for P2P lending first.
Just before that, I just forgot a really cool, I really like that feature in mutual funds. We have a sell nudge feature. So if you've subscribed, if you're a premium subscriber, and if you're trying to buy a fund which has a sell rating, what will happen is the app won't allow you until you click on it. Yes, I definitely want to buy. I surely want to buy. It'll just keep on telling you that we have a sell rating on the fund. Are you sure you want to buy it? Then it'll again ask you, are you sure you want to buy it? So we're just trying to prevent people don't make the wrong call.
Okay, that's pretty cool. Okay, but, let's start with P2P lending. Go to DigiGold after that.
So P2P lending, I think alternative investment space in India is booming massively and rapidly. So when I say P2P, I'll take a step back. Let's put it in the bucket of alternative investments, where there's P2P, or there could be even I would say lease financing. There are several alternative investments that have come up. We like the space. We've been very selective on whom we have partnered with. So we only have one partnership right now in the P2P space, which is Liquiloans, which we partnered with 2 years ago. So I know a credit card bills a payment platform recently even launched with them by a product called Mint. Like, we did that 2 years ago with them, and something like, we've been very conservative when it comes to alternative investment in P2P space. So we only have one partnership on the P2P side, which is with Liquiloans. And the core reason is, again, it's a product differentiator which they have amongst the other P2Ps. We like that space, and we think that, yes, if you have debt in your portfolio, a 5 to 15 or a 5 to 20% asset allocation in the alternative debt space can do wonders in balancing your portfolio and the returns. So yes, with time as well, we will add more products. When we ourselves are more comfortable, we will be adding more products too on our platform on the alternative investment side. And DigiGold, we haven't launched it yet. It's in the pipeline for end of this year. And again, it's like an investor favorite kind of a thing. Like, we are getting a lot of queries in terms of, we want to buy digital gold, because there are a lot of platforms who are already offering it. So yeah, the core reason why we are adding it is...
Okay, let's just delve a little bit on the P2P lending thing, right? Mm-hmm. What's your view on it, right? Because right now, all we've got are platforms, okay? And they're not taking any guarantees, okay? I guess they're arranging funds from this side to go to, they're arranging for funds to go from a borrower to a lender, but that's all they're doing. Because I don't think the RBI itself allows any guarantees, and there are some very good regulations out there. Where is this going to go, and where is it right now? Because these interest rates that you keep on seeing are like really, really high, and people are obviously tempted, right? But what's your view? NPAs, regulation, and I'm talking only from my perspective as an investor. Okay.
So as an investor, like, I've tried out 5 platforms. So even before we listed one on our platform, like, I myself tried 5 platforms that we monitored for almost a year. Like, all of my investments, we are monitoring it. There are a lot of different types of business models within P2P. So the high interest rate ones, which you're talking about, where it goes all the way to 30%. Now, all of these are highly subprime borrowers. So when you look at this, like, kahin se bhi loan nahi mila hai, that's when they are getting a loan from this specific platform. For such models and such businesses, I have not built conviction for such products which are upwards of 20%. The product which we have gives 8 to 11%. The borrower profile is at 720 CIBIL score average. It's all prime borrowers. because the entire model is like a subvention 0% EMI model, and then you make a spread from the manufacturer. So the end user is not paying any interest. And that's one of the models which we were comfortable with. And that's why we decided to go ahead with. So long term, if I'm looking at it from an investment perspective, I'm still building conviction, I would say, in the high interest rate P2P lending space. In the low interest rate, which is around 8 to 11%, I've built enough conviction. We've seen already a COVID wave 1, wave 2, which we've gone through. If NPAs if things would have gone south, like I think that would have been a very good time. Wherein some of my P2P portfolios, it did go south. While in the one which we have on our platform, it did not go. And like that's how we've been building conviction. It's a slow process, but we've been able to build conviction on the low interest rate. So it all depends on the borrower profile. Yes, RBI in terms of regulations, they are monitoring the P2P space. There are a lot of regulations also which are coming. Like now P2P lenders are accepting CKYC. Earlier, it just used to be a driver's license and an Aadhaar and you could invest. Now it's more CKYC. So I would say something what happened in mutual funds back in 2011, 12, 13 is now happening in the P2P space. Next 3-4 years will be crucial. And I think the core differentiator is going to be the business model which the P2P has, because there are several business models which are in the market. It could be edtech financing. It could be just pure play if someone wants to buy a scooter and there's a P2P financing. So of course, if someone's buying a scooter, I'm still not yet convinced. But if it's let's say it's an IVF or an edtech play, where if it's for a genuine purpose or not like a mobile phone, like those plays, like I feel a little more comfortable now about such plays.
Very interesting. I haven't covered P2P lending in as much depth here at Paisa Vaisa. Maybe I should. But anyway, so last question. You've got a new offering, Elivo, and it sounds like straight out of a Marvel comic movie or something. Tell us what it's about.
It's gonna be a Marvel when it comes out. Like we are just really excited and very optimistic about it. The idea behind Elivo is to build India's first digital non-individual investing platform. So when you look at all individual investing platforms, like all platforms are focused towards individual investing. Tarrakki itself, right? Our Android, iOS app or any other platform, it's for individuals. Now, let's say you're a small business or you're a medium-sized business. The only option from a treasury perspective right now you have from a digital standpoint is doing a fixed deposit. If you have any monies in your current account within 2 clicks, we are changing this and we are moving this completely, a complete digital experience in mutual funds for non-individuals. So these would be it could be a small proprietorship firm, private limited company, HUF, NRIs, anyone, even minors for that matter. Everyone, we are building a completely seamless digital platform under Elivo. Elivo we are launching it really soon. We've already onboarded beta users and it's full-fledged going on in testing right now phase. But that's something which we're very excited about. And a subset of Elivo is something we are opening up our entire tech stack and API infrastructure for other fintechs and neobanks to instantly add and launch wealth management as a solution. So we've already onboarded one of India's largest neobanks in the SME MSME space, and they will be using our solution to add mutual funds on their platform. Apart from that, we are closing 3 more. We are doing this with 3 other neobanks here. Closing this. So like probably by end of this year, we'll have like 4 neobanks who will be all powered by Elivo for their mutual funds or any wealth management services with a very core and strong focus on non-individuals.
Very interesting. Yeah? Come back to us once you've launched this, once you've given it some time, maybe somewhere next year, you can tell us all about it. But last question, Saumya, where can our listeners reach out to you? Just one thing, listeners, the app, the website, if you Google, it's called Tarrakki Progress in Hindi. Okay, that's RRK. Am I right?
Yes, that's
Saumya?
right. RRK.
Just give us some details out here.
Sure, absolutely. So the website is Tarrakki with a RRK, www.tarrakki.com. And if any of the listeners at ever point want to reach out to me, my email ID is Saumya, SAUMYA, @tarrakki.com. So easily accessible. I think I'm really quick to respond to emails versus a text message. So shoot me an email at any point of time. If any listeners need any help with any of their financial offerings or any of their financial advice, we'll be more than happy to assist anyone and everyone.
There you go, folks. Those are the details. I would definitely recommend checking their website out and, of course, decide on your own. But like Saumya said, feel free to reach out to him for any queries that you have. And that is a wrap on this episode of Paisa Vaisa. My guest, Saumya Shah, founder, Tarrakki. Saumya, thank you so much, man. Thank you so much for doing this for us. All the best for Elivo. I hope you come back to us soon.
Sure. It was great being here. Thank you so much for having me here. Really appreciate it.
Thanks, Saumya. And folks, here is the CRED privilege tip of the week. When it comes to debt funds, please match your objective with the instrument that you're investing in. Right? Debt funds have like all kinds of duration. There is liquid, there is short term, there is government security, there's credit risk fund. Don't mess that up. If you're someone who wants to play the interest rate cycle over the longer term, choose a product like that. If you're just temporarily parking your money somewhere, choose a product that's suitable for that. Don't mix and match on the debt fund side. Believe me, the returns can be a little bit off, and that's your CRED privilege tip of the week. And listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. And thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Hey, it's been another great week on the IVM Podcast Network. From Jeff Bezos to Amitabh Bachchan, everyone has tasted failure, but they don't give up. On Probation Se Promotion Tak, Abhinav talks about failure and how to use it as a stepping stone towards your goals. On a show about crypto, Rohan and Jaspit Bindra, founder of the Tech Whisperer, debate whether blockchain could be considered socialist in nature. On The Longest Constitution, Priya Mirza sheds light on untouchability in the workplace with the help of Article 17. Witness the liberation of Bangladesh in the season finale of War and Warriors as narrated by Air Vice Marshal Arjun Subramaniam. And on Audiogan, Kedar is joined by writer Himali Kothari. They talk about Project 87. This project focuses on English language plays from India. Do follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. And remember, if you're enjoying this show or any of our other shows for that matter, please do tell a friend. Go check out our YouTube channels. We go live on a whole bunch of different things. We have a number of different channels. You can find them on ivmpodcast.com/YouTube. And finally, we'd like to thank our sponsors this week. CRED, Bank of Baroda, CoinSwitch Kuber, Intel, and Oxfam India. Thank you for making this possible.
Have you ever wondered where the business world is headed? How the ways in which we create, market, and sell to consumers will evolve? Or if we'll ever go back to wearing pants while working? For answers to all of this and more, tune into Advertising is Dead with me, Varun Dugirala. Every Tuesday, as I talk to entrepreneurs, leaders, and change makers from across business, media, marketing, and beyond. You can catch all episodes of Advertising is Dead on the IVM Podcast website, app, or wherever you get your podcasts from.